While the whole market was busy reacting to oil price swings and the usual macro noise last week, something slipped past almost every major financial outlet. Brad Garlinghouse, the CEO of Ripple, made a statement so direct, so loaded with forward conviction, that it should have been the headline everywhere. It wasn't. And that gap between what he said and how little attention it received is exactly the kind of signal that separates the people who understand what is being built here from those who are still just watching a price ticker and calling it research. What I'm about to walk you through today is not a recap of YouTube drama or a rehash of the same talking points you've heard 100 times. This is the full structural picture, the architecture underneath the noise, and by the time we're done, I think you'll see this moment very differently than you did when you clicked play. Welcome back. This is Crypto Empire, where we skip the hype and go straight to the mechanism. Today, we are pulling apart exactly what is unfolding with XRP right now, why the timing matters more than most people realize, and what the math says that the emotion never will. Quick note before we go deep, nothing here is financial advice. Do your own research. Consult a professional. Now, let's get into it. Let me be direct with you. The number one mistake retail investors make when they look at XRP is that they are looking at price charts and asking the wrong question. They are asking, why hasn't it moved yet? When the real question, the one that institutions are already acting on, is, what does the world need XRP to become? And here is where the hidden mechanism comes in. Most people think of XRP as a cryptocurrency competing for attention in a crowded market. That framing is completely wrong, and it is costing people clarity at exactly the wrong time. XRP was architected from the ground up to solve a very specific and very expensive problem. The $27 trillion sitting dead and idle in Nostro and Vostro accounts around the world right now. These are funds that banks are required to pre-fund in foreign banks just to guarantee they can settle international transactions on demand. $27 trillion, locked, doing nothing, waiting. That is not an inefficiency. That is a structural flaw baked into the global financial system for decades. And it has been accepted because there was simply no better option. Until now. On-demand liquidity using XRP as the bridge asset means a bank in Brazil settling a transaction with a bank in South Korea no longer needs to hold idle reserves in Seoul. Instead, it can tap XRP liquidity in real time, convert at the point of settlement, complete the transfer in 3 to 5 seconds, and move on. No pre-funding. No idle capital drag. No 3-day wait window. That is not a feature. That is a redesign of how money moves on a planetary scale. And Brad Garlinghouse just told the world, plainly and clearly, that 2026 is another defining year with XRP sitting at the center of payments, custody, liquidity, and treasury management. He is not describing a product roadmap. He is describing infrastructure that is already in motion. Let's talk about the math, because this is where the retail crowd consistently gets lost. Cross-border payments represent approximately $150 trillion in annual volume. The foreign exchange market turns over roughly $7.5 trillion every single day, and the broader derivatives market, which underpins much of global trade finance and hedging activity, sits somewhere in the range of $1.2 quadrillion in notional value. Now think about what XRP actually needs to do in that system. It does not need to replace all of that flow. It does not need to absorb even a fraction of the derivatives exposure. What it needs to do is serve as the liquidity bridge at the moment of settlement, the conversion layer that sits between two currencies for 3 to 5 seconds and then disappears. The higher XRP's price, the fewer tokens are required to bridge a given transaction. That is not a minor observation. That is the core of the utility-driven price thesis. Here is how the math works. If you need to bridge a $1 million transaction and XRP is priced at $1, you need 1 million tokens in that liquidity pool at the moment of settlement. But if XRP is priced at $10, you only need 100,000 tokens, At $100, you need 10,000. The liquidity efficiency scales directly with price, which means that as institutional volume scales up, the system itself creates organic demand pressure for higher prices, not because of speculation, but because the math of moving large value at low friction requires it. The XRP ledger's tokenized commodities value has grown from roughly $100 million to over $1 billion in recent months. That is a 900+% increase in on-chain real-world value. And the ledger now ranks second globally for tokenized commodities, holding approximately 15% of the entire space. These are not pilot numbers. This is live capital choosing this infrastructure over alternatives and putting real money on it. The total supply of XRP is fixed at 100 billion. Approximately 55 to 57 billion are in circulation. Every transaction burns a small amount. Every settlement on ODL pulls demand, and exchange reserves continue to thin as more tokens migrate into private custody for the long term. Fixed supply, rising usage, accelerating burn. That is not a prediction. That is a structural requirement playing out in real time. Now, let's look at what the smart money is actually doing, because this is where the gap between the retail narrative and institutional reality becomes impossible to ignore. Ask yourself this question honestly. Does a firm like BlackRock or Fidelity move its infrastructure teams, its compliance departments, its custodial frameworks? Does it move all of that without absolute legal certainty? The answer is obviously no. These entities do not gamble. They position. And the positioning around XRP infrastructure has been unmistakable for anyone watching the right indicators. Ripple's recent acquisitions, including Hidden Road and G Treasury, are not marketing moves. Hidden Road is a major prime brokerage. G Treasury is a corporate treasury management platform. These are operational plumbing acquisitions. Ripple is not buying attention. It is buying the infrastructure that connects it directly to corporate CFOs and institutional liquidity desks. The CEO specifically highlighted that the office of the CFO is now engaging with digital assets in a fundamentally different way, not as speculative bets but as operational tools for vendor payments, payroll, and cross-entity cash management. That shift from speculation to operational integration is exactly the transition that precedes the kind of sustained institutional volume that changes price structure permanently. ETF flow data continues to signal net accumulation. Exchange reserve data shows consistent outflows as tokens leave liquid markets and enter long-term custody. Ripple has expanded leadership presence in Dublin, London, Singapore, and Sydney within weeks. This is not a company managing a news cycle. This is a company embedding itself into the daily operational fabric of the financial institutions it serves. Central banks and major payment providers are actively running pilots for energy and trade corridors using XRP. The India-UAE crude settlement corridor routing rupees to dirhams across the XRP ledger without touching traditional dollar rails is not theoretical. These are real flows, real value, and real signal. The petrodollar model had its moment. The neutral bridge era is already beginning. So what is the immediate near-term trigger landscape looking like right now? The Digital Asset Clarity Act is moving through legislative process in the United States and is expected to reach a vote this year. If and when that passes, it does not just remove legal ambiguity, it opens the institutional gateway. Compliance teams at major asset managers have had XRP on a conditional hold waiting for exactly this kind of clarity. Once that gate opens, the positioning that has been building quietly becomes allocation that is visible. Q2 and Q3 2026 represent the window where Ripple's expanded treasury and custody partnerships are projected to hit operational scale. The acquisitions from late 2025 and early 2026 typically have 6 to 9 month integration timelines. We are entering that window now. Daily successful payments on the XRP ledger recently crossed 2.7 million. a 12-month high. AMM pool liquidity is expanding. RLUSD, Ripple's stablecoin, is scaling rapidly to support real-world Treasury demand. These are not trailing indicators. They are the system loading before it runs. And the CEO himself has now told investors directly, 5 years from today, you're going to be very happy with where this lands. That is not a CEO managing expectations down. That is a CEO who knows the pipeline. The window that most people never notice is the one that closes quietly before the majority even realizes it opened. The scarcity dynamics around XRP right now are textbook. Exchange reserves declining to multi-year lows. Tokens migrating into private cold storage at an accelerating rate. Escrow releases of 1 billion tokens monthly, with the majority historically relocked, meaning net circulating supply growth is minimal, and a burn mechanism that reduces the float with every single transaction, every payment, every bridge use, every settlement. You have fixed supply compressing against rising institutional demand from tokenized assets, ODL corridor expansion, and corporate treasury integration. The free market has a well-understood answer for what happens when that dynamic matures. The question is not whether it resolves. The question is whether you are positioned before or after it becomes obvious. The crowd that will be loudest about XRP 36 months from now is currently watching from the sidelines, waiting for confirmation that never arrives until it is priced in. The people who understood the plumbing, who saw the institutional moves, the supply dynamics, and the structural role this asset was engineered to play, those are the people the CEO is talking to when he says, "You're going to be very happy." Let me address the critics directly, because they deserve a direct answer and not dismissal. The Bitcoin maximalist argument that institutions would never use XRP because it is tied to a private company is flatly contradicted by the on-chain data. Ripple does not control XRP. It is fully open source. Consensus is decentralized. Network amendments have passed against Ripple's own stated preference. The community governs the protocol. That is not a talking point. That is the operational record. The claim that XRP has lagged its adoption story on price is, on the surface, a fair observation. But it misunderstands timing. Institutional infrastructure has long lead times. Regulatory clarity requires legal processes, not marketing cycles. What we are watching now is the gap between when the rails were laid and when the trains actually start running at scale. Those two moments never arrive simultaneously. The rails always come first. The critics are not wrong that price has been patient. They are wrong about what that patience means. Here is the closing frame I want you to carry. We are watching the gradual, inevitable handoff from a dollar-centric correspondent banking model built for the 20th century to a multipolar, multi-currency settlement layer built for the world that is already forming around us. India and the UAE are settling crude in local currencies. BRICS nations are actively designing systems to reduce dollar dependency. Central banks are piloting CBDCs that need interoperability infrastructure to function across borders. Corporate treasuries are integrating digital rails for the first time. XRP is not a participant in that transition. XRP is the bridge, neutral by design, compliant by track record, fast by architecture, and now validated by the CEO of the company that built it, who looked at investors and said plainly, "If you stick with this for 5 years, you are going to be very happy." The signal is clear. The math is coherent. The institutional positioning is real. The question that remains is a personal one. Are you watching the noise, or are you watching the structure? Comment bridge below if you made it to the end. That tells me exactly who is paying attention. Stay patient. Stay rational. This is Crypto Empire. The math does not lie and the system is almost complete.